Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And today we meet here to discuss one of the very important topic of Indian economy, that is taxation. So first let me know whether voice is audible or not. Okay, so let's start our today's session. So when we talk about the taxes, what is the meaning of taxes? The word tax is taken from Latin word taxo. Tax is taken from Latin word taxo, which means to assess, to assess the worth of something. The word tax is taken from Latin word taxo, which means to assess the worth of something. If we are going to assess the worth of something, that is the meaning of taxo. So when we talk about the taxes in Indian context, taxes are nothing but compulsory payment to the government. Taxes are compulsory payment to the government. Okay, and in case of Indian government, there is three-tier structure. That is, there is union government, there is state government, there is local government. So all three governments are has the responsibility or has the authority to levy the taxes. So what is taxes? Taxes are compulsory payment to the government without any quid pro quo. Without any quid pro quo. What is the meaning of quid pro quo? The meaning of quid pro quo is without any consideration. Meaning is, if someone is paying taxes, be it in the form of income tax or property tax or whatever tax, that means on the behalf of the tax, nobody can claim to the government to have the special privileges. That is the meaning of quid pro quo. So let me summarize once again that what is the meaning of, good morning dears, what is the meaning of taxes? Taxes are compulsory payment to the government without any quid pro quo, and we understood the meaning of quid pro quo. Now when we talk about the taxes, the provision for taxes in India is under Article 256. That means it is a constitutional provision. It is a constitutional provision. So the provision for taxes in Indian Constitution is under Article 256, and this article says that no tax without representation. This article says that states have no taxes can be levied or collected except the authority of law. That means this article talks about that it is the authority only who can levy, and who is the authority? That is the government. Be the case of union government, or be the case of state government, or be the case of local government. All three-tier government is entitled to levy the tax. So Article 256 says that nobody can levy the taxes except the authority. And who is that authority? Only the government. Okay, so that is the meaning of, and the provision is under Article 256. And this article also says that no taxation without representation. No taxation without representation. So this is about the taxes. Now we are going to proceed further, and now we are going to discuss the classification of taxes. Okay, now we are going to proceed further, and we are going to discuss the classification of taxes. When we talk about the classification, that classification of taxes can be done on the basis of three criteria. One criteria is on the basis of tax rates. One is on the basis of tax rate. Other is on the basis of possibility of shifting the taxes. Other is on the basis of imposition. So let me that when we talk about the types of taxes, taxes can be levied on the basis of three bases. We can categorize the taxes on three bases. One is that on the basis of tax rates. So that means that can be the progressive taxation, that can be the proportional taxes, there can be regressive taxes, and there can be digressive taxes. So this is about the tax rate, that how much tax rate is being levied. We will discuss it in detail. Okay. When we talk about the other type of taxes can be on the basis of imposition of taxes. That means whether the taxes can be shifted or cannot be shifted. So that means that is the direct taxes and indirect taxes, and other can be on the basis of imposition, whether the tax is being levied on the basis of value or on the basis of volume. Okay. So that is the meaning of imposition, that on what basis taxes is being imposed. So that may be either on the basis of value of the goods or services or on the basis of volume of goods and services, like ad valorem tax is the tax which is being levied on the value of goods and services, whereas specific taxes are the taxes which is being levied on the basis of volume of the goods and services produced. Okay. So these are the three criteria. Now we are going to discuss all these three one by one. So first of all we are going to discuss that taxes on the basis of tax rate. Okay. That classification of taxes on the basis of tax rate, and on the basis of tax rate the taxes can be categorized under, one is known as progressive taxes, other is known as proportional taxes, other is known as regressive taxes, other is known as digressive taxes. So we will discuss all these in detail. So what is the meaning of progressive taxes? Progressive taxes means the marginal tax rate increases with the increase in taxable income. As the taxable income increases, the marginal tax rate increases. We will discuss with example, don't worry. So first let me conceptualize the thing. So what is, I am going to repeat once again, what is progressive taxes? Progressive taxes are that the marginal tax rate increases with the increase in taxable income. That type of taxes are known as progressive taxes. An example of this is personal income tax, PIT. PIT is the example of progressive taxes. Suppose, what is the meaning of marginal tax rate? Let me explain what is the meaning of marginal tax rate, because this is the technical word. Okay, lot many books use direct taxes as the tax which is being levied directly. Okay, that should not be. Okay, that should not be the definition. So we have to use these words. Okay, these are the, each and every discipline has their vocabulary. Similarly, economics also have their vocabulary. So this is the vocabulary of economics. So whenever we are going to discuss that progressive taxes, we have to use this word, that progressive taxes are those taxes in which marginal tax rate increases with the increase in taxable income. That is the meaning. Okay. So now we will try to understand it with the example, that what is the meaning of marginal tax rate. Suppose up to 2 lakh, we are taking a hypothetical situation, don't worry. Okay, that means income tax is being levied on the basis of tax slab. So we are going to take a hypothetical situation. Suppose up to 2.5 lakh, that is nobody has to pay any tax, that is known as tax exemption. So from 2.5 lakh, to 5 lakh, 5 lakh, this is hypothetical. Suppose the pupils has to pay the taxes at the rate of 10%. Okay, from 5 lakh to 8 lakh, 8 lakhs, pupil has to pay the taxes at the rate of, suppose 25%. Okay, we are taking a hypothetical situation because I want to explain what is the meaning of marginal tax rate. And more than 8 lakh, the marginal tax rate is suppose 45%. This is very high, and I have taken this example intentionally to explain you people that what is the meaning of marginal tax rate. Okay, so what is the meaning of marginal tax rate? Marginal tax rate means unit of tax. How much increase is going to, that in our example from up 2.5% to 2.5 lakh to 5 lakh, that is initially 2.5 lakh is exempted from any tax, and starting 2.5 lakh money or income of any individual is being taxed at the rate of 10% only. That after that another 3 lakh, 5 lakh to 8 lakh, another 3 lakh is being paid at the rate of 25%. So what is the increase? That increase is 15%. So since earlier the taxable income was only 2.5 lakh, now in this example from 5 to 8 lakh, the taxable income is 3 lakh. So as the taxable income is increasing, that taxable income has increased from 2.5 lakh to 3 lakh, that is 0.5 lakh or 50,000. So that as the taxable income has increased, the tax rate also increased, because the tax rate has increased from 10% to 15%. So how much increase is there? It is 15% increase. So this is the meaning of marginal tax rate. This is the meaning of marginal tax rate. That earlier, that means there was only at the rate of 10%. Now next 3 lakh or next 3 lakh is going to be levied at the rate of 15% more. And why it is? Because people in this bracket, people are comparatively less rich. In this bracket, pupils are rich, more rich. So just to have the equality, just to decrease the disparity, that's why these progressive taxes are known as instrumental for ensuring the equality in the society, because it ensures the horizontal equality as well as vertical equality. So this is the meaning. And another more than 3 lakh, whatever it going to be, more than 8 lakh to 30 lakh or 50 lakh, whatever it is going to be, they have to pay at the rate of 45%. So how much increase? 25 to 45. This increase is 20%. So on initial income, each and every individual has to pay only at the 10%, and after that they have to increase that tax rate more than 15%. They have to pay extra 15%, and or other pupils who are more richer, they have to pay extra 20%. So this is the meaning of marginal tax rate, and this type of tax system is being levied just to ensure the equality, especially economic equality in the society. And income tax is the example of progressive tax system in India. So when we talk about the categorization or types of taxes, on the basis of tax rate, it can be 4 types, and we discussed first one, that is progressive tax system. So what is progressive? As the marginal tax rate increases, the marginal tax rate increases as the taxable income increases. Here the marginal tax rate 10 to 25. What is marginal tax rate? That is 15%. What is marginal tax rate? 25 to 45. That is 20%. 20% is the marginal tax rate. So why it is increasing? It is increasing because taxable income is also increasing. Initially it was 2.5 to 5, that is 2.5 lakh. Then it is increased to 3 lakh. Then it increased to more than 3 lakh. So this is the meaning of marginal tax rate, and this is the meaning of progressive tax system or progressive tax. Now we are going to proceed further and we are going to discuss the another example, that is proportional tax rate. Proportional tax or proportional tax system. What happen in case of proportional tax system? The marginal tax rate remains constant irrespective of taxable income. I am going to repeat once again that in case of proportional tax system, the marginal tax rate remains constant. That means there is no increase in marginal tax rate when there is increase in the taxable income. That means the taxable income is increasing, but the marginal tax rate is not increasing. That is known as proportional tax system. That is known as proportional tax system. And the corporate income tax in case of India, good morning dears, good morning to all, and try to be on time please dears. I am going to repeat once again that what is proportional tax system? In case of proportional tax system, the marginal tax rate remains constant irrespective of the taxable income. That means taxable income may be increasing, but marginal tax rate is not increasing. Okay, that type of system is known as proportional tax system. Okay, proportional tax system, tax rate remains constant irrespective of taxable income. And corporate income tax or corporate income tax is the example of proportional tax system in India. Okay, and first let me explain that what is the meaning of corporate income tax. That means suppose Reliance Industry is there, Reliance Industry, they are doing business in different domains, and there is that CEO of Reliance or manager or that means managing director, CEO of Reliance Industry, suppose Mukesh Ambani. So that means in economics, I just want to say that in economics, this Reliance Industry and the CEO of Reliance, that is Mukesh Ambani, is two different entity. So whatever tax Mukesh Ambani is going to pay on his income as a CEO, that will be known as personal income tax, whereas whatever tax Reliance Industry is going to pay on their income, that is known as corporate income tax. So what is the income of the Reliance Industry? That is nothing but profit. What that means, this Reliance Industry is involved in the business process or business activity, and in response to that they must be earning some profit. So whatever profit they are earning, that is nothing but income of the company Reliance Industry, income of the Reliance Industry. So on that income, the Reliance Industry has to pay tax. That tax is known as corporate income tax. So as a CEO, Mukesh Ambani must be drawing some salary. Okay, on that salary is nothing but personal income of Mukesh Ambani, and on that personal income, Mukesh Ambani has the liability to pay tax, that is known as personal income tax. Sure dear, sure. Is it visible now? Yellow is okay? So what is proportional and what is corporate income tax? Corporate income tax is the tax which is being paid by the company on their income. And what is the income of the company? That profit of the company is nothing but the income of the company. So, and that means in case of India, let me rub it first. In case of India, what we are talking about? We were talking about corporate. Okay, in case of India, corporate income tax. Corporate income tax is being levied on the basis of proportional taxes. So that means that in case of India, that income of the company is being paid, that means 30% is the tax rate for domestic companies on their, if their income is more than certain percentage, that may be suppose more than 20 lakh, 10 lakh. So if it is domestic company and if their income is more than 20 lakh, they have to pay the taxes at the rate of 30%. So that there may be some companies whose income may be 20 lakh. So whosoever income is more than 20 lakh, all those have to pay the taxes at the rate of 30%. So that means the company, suppose A is the company who has the taxable, that profit or taxable income 30 lakh, and there is some other company B which has the that profit of the company more than 50 lakh. So that means all the both, that means the company A also has to pay taxes at the rate of 20% and company B also has to pay the taxes at the rate of 20%. So why that taxable income has increased but marginal tax rate is 0, because there is no increase. That taxable income has increased to 20 lakh but the marginal tax rate is 0, it is constant only. That means the company which has the 30 lakh income, that also has to pay the taxes at 20%, and the company which has the taxable income equal to 50 lakh, they also has to pay the taxes at the rate of 20%. Definitely tax liability will be different. That means tax liability, that 20% of 30 lakh will be different from 20% of 50 lakh. Okay, but the marginal tax rate is constant. That type of a system is known as proportional tax system. Proportional tax system. And corporate income tax, CIT, in case of India is levied on the basis of proportional tax. On the basis of proportional tax. I think it is very clear. Now we are going to proceed further and we are going to discuss the regressive tax system. We are going to discuss the regressive tax system. What is the meaning of regressive tax system? That it is opposite to progressive. It is opposite to the progressive tax system. In case of regressive tax system, the marginal tax rate decreases with the increase in taxable income. As the taxable income increases, marginal tax rate decreases. That means this is a system which is instrumental for making richer more rich and poorer more poor. Regressive tax system. Regressive tax system, marginal tax rate decreases with the increase in taxable income. As the taxable income increases, marginal tax rate decreases. Okay, so opposite to progressive, whatever, suppose 2.5 lakh to 5 lakh, they have to pay the taxes at the rate of 40%. Okay, 5 lakh to 8 lakh, they have to pay the taxes at the rate of 30%. And more than 8 lakh, they have to pay the taxes at the rate of 10%. Okay, this is nothing but this is the type of system which is known as regressive tax system. Marginal tax rate decreases if the company is, that means that is known as foreign company. Foreign company, the foreign company has to pay the taxes at the rate of 40%. Indian company has to pay the income tax at the rate of 30%, whereas foreign company has to pay the taxes at the rate of 40%. At the rate of 40%. Okay, Indian company pay the taxes at 30%, whereas foreign company pay the taxes at 40%. Okay, and the UPSC is never going to ask this data. Okay, please do not focus on that facts, rather focus on the concepts. Okay, so I will request you people. Okay, it is okay, good enough. Okay, you want to, it is okay, but don't try to mug up this. Okay, that means there should be this idea that there is difference between the domestic companies, that means the tax rate of domestic companies in comparison to foreign company. Foreign companies has to pay tax at higher rate in comparison to domestic companies. Okay, and there is no need to remember the exact figure. Okay, that, but although the foreign companies has to pay the taxes at 40% and domestic company has to pay the taxes at 30%. Okay, so this is the, okay, so I think it is very clear that marginal tax rate. So no, be very clear that no country can, this is the system which is instrumental for increasing the economic disparity in the society. The regressive tax system is the system which is instrumental for increasing economic disparity or inequality in the society. So no country can afford a progressive tax system. No country can afford a progressive tax system. So no country has the progressive tax system. But before the French Revolution, in the French society, there was regressive tax system. You people must be aware about that there was 3-tier structure. That these upper two were not paying any tax, or all taxes was being paid by third tier of people. Okay, that's why there was French Revolution. They were enjoying all the privileges, but they were not paying any tax. So in the ancient time or in medieval time, before the French Revolution, in the French society there was regressive tax system. But nowadays, in modern time, no country can afford regressive tax system. Why? Because it is instrumental for increasing economic inequality in the society or economic disparity in the society. What is digressive tax system? What is digressive tax system? Let me explain first. That digressive tax system is the system in which that initially marginal tax rate increases with the increase in taxable income. After that, after a particular point of time, it becomes constant. And that corporate income tax, the personal income tax is the example of digressive tax system. So digressive tax system is a type of progressive tax system only. That digressive tax system is a type of progressive tax system only. But what is difference between that? In case of progressive tax system, that there is continuous increase in the marginal tax rate with the increase in taxable income. But in case of digressive tax system, initially with the increase in taxable income, marginal tax rate increases. After that, it becomes constant. That is the meaning of digressive tax system. And why this type of provision? And this type of provision is because of Laffer curve. Because if we are going to increase the marginal tax rate unconditionally, then rather than that means that tax revenue decreases rather than increasing the tax revenue. Because people will, rather than paying the taxes, people will try to evade and avoid the taxes. Because if someone is earning 100 rupees and government is taking 80 rupees as a tax, will people be in position to pay it? No. Okay, so if the progressive tax system is there, then unconditionally, that means there will be some situation, that means people are earning 100 rupees and they have to pay the taxes at 100%. So there is no motivation. So that means that is Laffer curve. Okay, and that was explained by economist known as Laffer, Arthur Laffer, who said that when the tax revenue of the government will increase only when tax revenue of government will increase only when the tax rate is optimum. Tax rate is optimum. If it is less than optimum, then there will be reduction. If it is more than optimum, then the tax revenue will also reduce. So that's why that is nothing but digressive tax system. That is nothing but digressive. So marginal tax rate increases initially, after that it becomes constant. That type of system is known as digressive tax system. Now we are going to proceed further, and I try to explain for you people these with diagram also, the tax rates, different type of tax rate. I think red will be okay for this. Is it okay? Red is okay for here. Okay, sorry. So I explain that with the diagram these types of tax system. So that since the progressive tax system, under the progressive tax system, what happened, the marginal tax rate increases with the taxable income. So that means on y axis we are taking the marginal tax rate, and on y axis we are taking the income, taxable income or base income. On x axis we are taking taxable income or base income, and y axis we are taking marginal tax rate. So in case of progressive tax system, this will be the progressive tax system, because as the taxable income increases, marginal tax rate increases. So as the marginal taxable income increases, marginal tax rate increases. So this is the progressive tax system. Okay, it will not start from origin, be very clear, because whatever, okay, as I said that 2.5% to 5 lakh, okay, that means that that is 10% or whatever it may be. Okay, so that means this will not start from origin, that means there must be some tax rate, at the same time there must be some taxable income. So whatever, so this is going to be progressive tax system. Why it is not working? So this is progressive tax system. Okay, when we talk about the proportional, that means irrespective of the taxable income, the marginal tax rate remains constant. So when this was the taxable income, this much was the taxable income, tax rate was this much. Whenever this was the taxable income, this was the taxable income, only remains constant. Okay, what is digressive? Digressive means marginal tax rate decreases with the increase in taxable income. Let me rub it first. So when we talk about the marginal, when we talk about the digressive, this is the digressive tax system. Okay, this is showing, this row is showing the digressive tax system, because when this was the tax rate, taxable income was this much. As the taxable income is going to increase, this much was the taxable income, tax rate decreases. This much was the taxable income, as the taxable income increases, tax rate decreases. This was the, okay, and this line is showing digressive tax system up to here. With the increase in taxable income, tax rate was increasing. Up to here, this point, when there was increase in taxable income, marginal tax rate was increasing. After this point, this becomes constant. This becomes constant, and that is nothing but digressive tax system. Digressive tax system. I think it is very clear. Now we are going to proceed further, and we are going to discuss that categorization of taxes. We are going to discuss the categorization of taxes on the basis of possibility of shifting the tax burden. Possibility of shifting the tax burden. Okay, whether the tax burden can be shifted or not. Possibility to shift the tax burden. Okay, so when we talk about that possibility to shift the tax burden, what is the meaning of, and for that I will use two words. Please dears, listen me and listen me very carefully what I want to say. That means when we talk about the taxes, there is two words, and these words must be there when you are writing your answer with respect to tax. One is known as impact of tax. Impact of tax. Other is known as incidence of tax. My dears, please listen me and listen me carefully. There are two words. One is known as impact of tax. Other is known as incidence of tax. What is the meaning of impact of tax? That on whom it is being levied. It is being levied. Levied means imposed. As I said that economics has their terminology. So levied means imposed. So impact of tax refers to on whom it is being levied or imposed, whereas incidence of tax refers to by whom it is finally being paid. Like in case of GST, that GST is being paid on the production stage, or distribution stage, on the manufacturer of the goods or services. But so impact of tax in case of GST, the impact of tax is on the manufacturer, but manufacturer is not going to bear the burden of tax of GST. Who is going to bear finally burden? The ultimate consumer. Okay, and who final consumer is going to bear the burden of tax in the form of prices. So when the price are going to be in the market, that manufacturer is going to include the taxes in the prices of final product, and that's why it is going to be beared by the consumer. So on whom incidence is? The incidence of taxes in case of GST, the impact of tax is on the manufacturer, and whereas the incidence of tax is on the final consumer. Okay, suppose this is a marker, and this marker is being manufactured by Maxhub. Okay, Maxhub. Okay, so that means that impact of this marker, impact of tax being levied will be on the manufacturer of this Maxhub. Whereas who is going to pay? Whosoever is going to consume textbook. And how they are going to pay that tax? In the form of the price of this marker. Okay, so when we talk about the whether the tax burden can be shifted or not, on the basis of that only we can divide the taxes in two categories. One is known as direct tax, other is known as indirect tax. One is known as direct tax, other is known as indirect tax. So direct taxes are those taxes which is levied on the income or wealth of the individual, and the incidence as well as impact of taxes are on the same person. That means that the tax burden cannot be shifted to others. So direct taxes are those taxes in which the burden of taxes cannot be shifted to others, whereas indirect taxes are those taxes which is being levied on the manufacturer, on the production or distribution stage, and the incidence impact of taxes is on one person, whereas incidence of tax is on other person. That type of taxes are known as indirect taxes. So let me summarize once again. That in case of whether that tax burden can be shifted to others or not, on the basis of that we can categorize the taxes under two categories. One is known as direct tax, other is known as indirect tax. What is direct tax? Direct taxes are those taxes in which incidence of tax as well as impact of tax is on the same person, whereas indirect taxes are those taxes in which incidence of taxes is on the final consumer, whereas impact of taxes is on the producer of the goods or services. That type of taxes are known as indirect taxes. So I think it is very clear. Let me know whether incidence of tax or impact of tax is clear or not, because I will frequently use these words. Impact of taxes, on whom it is being levied. So in case of indirect taxes, tax is levied to the manufacturer or to the producer, but who is going to bear finally? The consumer is going to bear. Consumer is going to bear the burden of taxes in the form of prices, of goods and services. That is the meaning of incidence. So now we are going to proceed further. So we understood what is direct tax. First we will discuss the direct taxes, then we will proceed for indirect tax as well. So direct taxes, as I said, I am going to repeat once again. Direct taxes is those taxes which is being levied on wealth or income of the individual. Wealth or income of individual. That individual may be company and that individual may be a person. So in case of economics, company is separate legal entity, and that's why the PIT, personal income tax, corporate income tax are the example of direct tax. So personal income tax and corporate income tax are the example of direct taxes. Not only personal income tax and corporate tax, but also wealth tax, security transaction tax, property tax, capital gain tax. These all the example of direct tax. So in case of direct tax, it is being levied on income or wealth of individual. At the same time, in case of direct tax, impact of tax as well as incidence of tax is on the same person. This is about the direct taxes. Now we are going to proceed further and we are going to discuss indirect taxes. So I discussed it that indirect taxes are those taxes which is being levied on production or distribution stage, and in case of indirect taxes, the impact is on one person, whereas incidence of tax is on another person, and this burden of taxes can be transferred to others partially or fully. Okay, it is discretion of the manufacturer or the producer to transfer the burden fully or partially on the consumer. That means if they are going to transfer it fully, then the prices of commodity or prices of goods or services are going to increase, then that is not going to be competitive in the market. That's why they will lose its competitiveness, so their revenue is going to decrease. Whereas they are going to pass burden is going to be passed partially, then this is going to be competitive in the market. That's why generally in case of indirect taxes, producer passes the burden to others partially, but theoretically it can be passed fully or it can be passed partially. So this is about the, and indirect taxes are regressive in nature. Regressive, I am not saying that they are regressive, they are regressive in nature. What is the meaning of regressive and regressive in nature? Regressive in nature means it affects the poorest most, because be the case of, take the example of necessary goods, whatever it may be. Okay, suppose you are going to take the example of necessary goods, although agriculture product are not taxed, but suppose example we can take necessary goods of cloth. Okay, we can take the cloths. Okay, that means cloths is being consumed by the rich as well as poor. So that means, and for rich or poor, it is going to be taxed at the same rate, be it 10% or 20%, whatever it may be. So that means if rich is going to wear a jeans or whatever it may be, they have to pay the taxes at 20%, and if poor is going to wear a jeans, he or she also has to pay the taxes at the rate of 20%. So on whom it is going to affect more? It is going to affect more to the poor, because the purchasing capacity of poor is comparatively lesser. That's why it is regressive in nature, because indirect taxes affects the poorest most, whereas direct taxes are progressive in nature, because high income, they have to pay high rate of taxes or high taxes. That's why it is going to ensure the equality in the society. So direct taxes are progressive in nature, whereas indirect taxes are regressive in nature. Okay, now we are going to proceed further. And what are the examples of indirect taxes? It may be custom duty. It is custom duty. This service tax and this VAT is already consumed under GST. So GST, custom tax, custom duty, and GST is the example of indirect taxes. Is example of indirect taxes. Now we are going to discuss the difference between direct tax and indirect tax. Although we have discussed it comprehensively, but let me discuss once again. So when we talk about the differences between direct tax and indirect tax, that on the basis of their imposition we can differentiate. So what is the basis of imposition? That in case of direct taxes, the direct taxes are being levied on the income or wealth of the individual. Okay, so one criteria of differentiation may be that direct taxes are being levied on the income or wealth of the individual, whereas indirect taxes are levied on production and distribution of goods and services. Okay, so first difference, that direct taxes are being levied on income and wealth of the individual, whereas indirect taxes are being levied on production and distribution of goods and services. Second differentiation, the burden of direct taxes cannot be shifted to others, whereas burden of indirect taxes can be shifted to others, meaning in case of direct taxes, impact and incidence of direct taxes are on the same person, whereas in case of indirect taxes, the impact and incidence of taxes are on two different persons, okay. Next we can say that progressive, that means direct taxes are progressive in nature, whereas indirect taxes are regressive in nature, okay. And other thing we can say that the objective of levying the direct taxes is social as well as economic. Social means we want to ensure equality, we want to decrease the economic disparity. That's why it is going to reduce the income of the richer, whereas it is government is going to make provisions for the poorer by collecting the revenue. So it is going to decrease the disparity, whereas the purpose of levying the indirect taxes is only economic, that government is going to have the revenue only, okay. Other thing we can say that it is that direct taxes are not inflationary in nature, that is not going to be instrumental for inflation, whereas indirect taxes are inflationary in nature. Inflationary in nature means it is being included because the burden or the burden of taxes is being added in the prices. So if the taxes are going to increase, then the prices is going to be automatically increase. If the price increase in prices is nothing but inflation, okay. So that indirect taxes are not inflationary, whereas indirect taxes are inflationary. And the examples of indirect taxes are corporate income tax, personal income tax, security transaction tax, capital gain tax, etc. And examples of indirect taxes are GST, custom duty, stamp duty, entertainment tax, etc. Okay. So this is about the difference between direct tax and indirect tax. If there is any doubt, let me know. If there is any doubt to anyone, let me know. Then we are going to proceed further, and we are going to discuss that the categorization of taxes on the basis of imposition. That on what basis it is being imposed. On what basis, whether it is being imposed on the basis of value of goods or services, or it is being imposed on specific criteria, that may be length, that may be weight, whatever, that may be per liter, that may be per kilogram, whatever it may be, okay, volume. So on the basis of imposition, that on what basis it is being imposed, that the taxes can be categorized under two categories. One is known as ad valorem tax, other is known as specific tax. On the basis of imposition, it can be categorized as ad valorem tax and specific tax. Ad valorem is taken, okay, from Latin word, okay, and ad valorem means output according to the value. According to the value. Ad valorem means according to the value, and these taxes are being imposed on the value of output, or value addition of goods and services, like GST. Okay, before the GST scenario, when we were having the SENVAT, that means there was tax on tax. That's why we eliminated the scenario of SENVAT. Before that there was MODVAT. Okay, so before that there was excise duty. That means in starting there was excise duty. Excise duty was replaced with mod VAT, and mod VAT was replaced with sen VAT, and now sen VAT is being replaced with GST. And in all these cases, be the case of excise duty, be the case of mod VAT, and be the case of sen VAT, there was tax on tax. Okay, there was cascading effect of taxes. That's why we replaced this system with the GST. So GST is the system in which the taxes are being levied not on the final value of final product, rather it is being levied on the value addition in the business process. We will discuss, okay, when we will discuss GST in detail, very detail. Okay, so what is the meaning of ad valorem? Ad valorem taxes means according to value. So when they are being imposed, they are being imposed on the value of output. Okay, it may be 5%, 10%, 20%, whatever it may be. Okay, or on the value addition in the production process. Like we are using suppose wheat. The value of wheat is 20 rupees. Now wheat is being that converted into grain. Okay, and the value of grain is 30. Okay, and this grain is being imposed to cake or cake, and the value of cake is 50. So whenever 10% is suppose being levied, so that means that when we are going to levy the tax, it will be levied only in the value addition. Okay, that means here the value addition is when the farmer sow the seed, it was 0 or whatever, that means they produce the wheat of 20 rupees. So although in agriculture practices we do not levy the tax, but it is hypothetical. So 20%, so 10% it is going to be 2. So what is value addition? Where from wheat to grain it was converted. So value addition, that means wheat was of 20 rupees and grain is 30 rupees per kg. So what is 10 rupees? So what is going to be 1 rupees? What is cake? So value addition is 20, so it is going to be 2. So earlier when there was sen VAT, that tax was levied on 20, 30 and 50. So that means this product, wheat was levied here also, wheat was levied here also, and wheat was levied here also. That's why it was making our product incompetitive in the international market. That's why we replaced this system with GST. Now in GST, the tax is being levied on value addition. What is value addition? Here the value addition is 20 rupees. Here in the next business process, the value addition is of 10 rupees. Here in the next business cycle, the value addition is of 20 rupees. So here the tax will be levied on 20 rupees. Here the tax will be levied on 10 rupees. Here also tax will be levied on 20 rupees. But in case of excise duty, tax was levied on 20 rupees, 30 rupees or 50 rupees. So there was tax on tax. That's why it was making, and that tax burden was being beared by the consumer in the form of prices. So it was increasing the prices of the product in the market, and because of that our product was becoming incompetitive in the international market, as well as there was inflation because of this in domestic economy. So we replaced it with GST. So when this is being levied on the value in place of value addition or on the value of output, that is known as ad valorem. Ad valorem tax. That is known as ad valorem tax. Now, I think it is very clear what is the meaning of ad valorem tax. Now, this ad valorem tax is being expressed in the form of percentage. It may be 5, that means in case of India we are having 5 tax slab for GST. So it is generally being expressed in percentage. In percentage. It is expressed in percentage. Okay, and it is progressive in nature, because as the value of goods and services increases, it is progressive in nature, because as the value of goods and services increases, the tax revenue also increases. Progressive in nature. Okay. Now we are going to discuss the specific tax. What are the specific tax? The specific taxes are those taxes which is being levied on the basis of some specific criteria, and those specific criteria may be on the basis of length, that may be on the basis of weight, etc. That's why these taxes are also known as per unit tax. Per unit tax. That specific taxes are those taxes which is being levied on a specific criteria, like that specific criteria may be weight, that may be length, that may be breadth, that may be per meter, that may be per liter, that may be per kilogram, whatever it may be. Okay, that's why it is known as per unit tax. For example, we fix the excise duty of 100 rupees for per liter of petrol. That is the example of excise duty, is the example of specific tax. Now we are going to proceed further, and we are going to discuss that difference between ad valorem and specific tax. Although we discussed it in detail, but let me summarize once again. So ad valorem tax is assessed or levied on the value of product. It is being levied on value of product or in the value addition of the goods or services, and ad valorem means according to value. We discussed already, whereas specific tax is being levied on the quantity of units sold. Quantity of units sold. Okay, that whatever volume is being sold, it may be 1 kg, it may be 100 kg, it may be 1 quintal, it may be whatever length and width. Okay, so that means it is being quantity sold. Okay, so that means an ad valorem tax is being levied on the value of item purchased. Okay, that if you purchase 200 rupees item, so 5%. So value of item purchased, whereas specific taxes are being levied on the volume of item purchased. Volume, that means suppose you purchase 100 meters of cloth, and on there may be that 5 rupees per meter or 1 rupees per meter, so you have to pay 100 rupees. So this is the, okay, these taxes are generally expressed in the form of percentage, we already discussed. Ad valorem taxes are expressed in the form of percentage, whereas these specific taxes are expressed in specific sums, that may be per meter, that may be per kilogram, that may be per liter, whatever it may be. Okay, per unit. Okay, example of ad valorem tax is GST, and there is 5 tax rate in GST, there is 0% tax rate of GST, there is 5% tax rate, 12% tax rate, 18% and 28%. Okay, example of we already discussed GST, property, sale tax, etc. Whereas in case of specific taxes, the example is excise duty on petroleum product and liquor product. Okay, that this is not subsumed under GST, and this is also not subsumed under GST. Most of indirect taxes are being subsumed under GST, but there are certain taxes which are not being subsumed under GST. We will discuss when we will discuss GST in detail. Okay, and ad valorem taxes are progressive in nature, we discussed already, and specific taxes are regressive in nature. Okay, these are progressive in nature, that's why we replaced VAT and we came with GST. Okay, and there was lot many hue and cry. Okay, that means we want to implement GST since 2002. Okay, but we were able to introduce GST in 2017 only, after 15 years and lot many efforts. Okay, and that's why UPSC has repeatedly asked the question up to 2016, and after that also in mains as well as prelims. So we will discuss that in very detail. Now we are going to proceed further, and we are going to discuss another type, that is known as cess and surcharge. We are going to discuss cess and surcharge also. What is the meaning of cess? Cess means it is tax on tax. Okay, that means, as I said, that these taxes are instrumental. Okay, taxes are instrumental for tax revenue for the government, and through that tax revenue government can make the provisions for the weaker section of society or downtrodden. So it is instrumental for social equality as well as economic inequality in the society, and that's why the government has some resources that in addition to tax revenue government want to have some extra resources for tax revenue, and that extra resources may be in the form of cess and surcharge. So first we will discuss that what is cess, then we will focus that what is surcharge. So what is cess? Cess is nothing but tax on tax. Okay, cess is tax on tax, but cess is being imposed for a specific purpose. Okay, if we are saying that education tax, so whatever revenue is being collected through education tax, that can education tax, that can be spent only for the promotion of education in India. That is the meaning of cess. Cess means cess is also tax on tax and surcharge is also tax on tax, but only difference is that cess is being levied for a specific purpose, whereas surcharge can be levied for whatever purpose government want to. So whatever revenue is being collected through cess can only be used for that specific purpose only, whereas whatever revenue is being collected through surcharge, that can be used for any purpose. Okay, so cess is tax on tax. As I said that, for example, if 5% education tax is there and 20% income tax, okay, so what is going to be that 5% of 20%, 20 upon 100 into 5 upon 100, so it is going to be 1 upon 5. This is going to be 1 upon 5. Okay, so it is going to be 1%. Okay, 20% of 5%, it is going to be 1%. Okay, so this is going to be 41%. It is tax on tax. Okay, it is critical to remember that cess must be applied for a specific purpose, for the purpose for which it is being levied. So it can be levied for a specific purpose. For example, Indian government collect the education cess and uses it solely for that reason only, namely education. Furthermore, tax is imposed on all taxpayers. It is imposed on all taxpayers. Cess tax are paid to the, that means whatever revenue is being collected through cess, that is going to be part of consolidated fund of India. Okay, cess is generally expected to be charged until government fulfill that purpose. Okay, that means government is supposed to charge the cess up to the time whatever purpose or whatever objective is being defined by the government is not being fulfilled. Okay, so that is, and nowadays we are levying, government is levying education cess, road cess for infrastructure development, infrastructure cess, clean energy cess, Krish Kalyan cess and Swachh Bharat cess. Okay, and there is very famous dialogue of our respected Prime Minister Modi ji, who said in a public rally that the condition of farmers should be improved or not. People said that it should be improved, and that's why he said that then say pay Krish Kalyan cess. Okay, so that means this Krish Kalyan cess is being used for the improving the condition of farmers. So Krish Kalyan cess, whatever revenue is being collected through Krish Kalyan cess, that is being used for improving the condition of farmers. Okay, so that is, and Bharat cess, etc. So this is about the cess. Now we are going to proceed further and we are going to discuss that surcharge. Surcharge is also a tax on tax. Surcharge is also a tax on tax, but in case of surcharge, that it is not being levied for a specific purpose, that government can levy for any purpose, that purpose of surcharge is to have the extra resources or extra revenue collection. Okay, and that extra or additional revenue collection can be utilized for any purpose. Okay, any purpose. And in case of India, that the personal income tax, okay, the people who have the income more than 50 lakh and less than 1 crore, they have to pay the surcharge at the rate of 15%. They have to pay that surcharge at the rate of the pupils who have the people who have the taxable income or income less than 1 crore, they have not to pay any surcharge. But the people who have the taxable income in between 1 crore to 2 crore, they have to pay taxes at the rate of surcharge, not tax, because it is tax on tax. So whatever tax they have been paid, on that tax they have to pay extra 15%. Okay, and the people who have, or the individual who have the income 2 crore to 5 crore, they have to pay tax on their tax liability at the rate of 25%. And the individual who have the income more than 5 crore, they have to pay tax on their tax liability at the rate of 37%. Okay, and that surcharge for domestic companies are 7%. If they are, that means surcharge in the form of corporate income tax for the domestic companies, that company has to pay the tax on their income, that is known as corporate income tax. So that means corporate income tax, the companies has to pay surcharge. Okay, and for the domestic companies whose taxable income is in between 1 to 2 crore, in between 1 to 10 crore, they have to pay taxes at the rate of 7%. And the domestic companies whose profit is more than 10 crore, they have to pay the tax on their tax liability at the rate of 12%. It is for the domestic company. And for the foreign companies, okay, that means the foreign companies is those companies whose is being promoted by the foreigner. Okay, so if they are being, and their profit is in between 1 to 10 crore, they have to pay the taxes at the rate of 2% on their tax liability. Whereas if their income is more than 10 crore, they have to pay the taxes at the rate of 5%, at their tax liability, not on taxable income, rather on tax liability. Because be the case of surcharge or be the case of cess, they are being paid tax on tax. Okay, so on the tax liability. Okay, surcharge in income tax is substantial source of revenue for the government, we all know. Okay, that the money collected for whatever purpose the union government can deem appropriate, whatever purpose the union government can use the revenue collected through surcharge. The money paid in India, that means it is also whatever revenue is collected through the surcharges, that is going to be part of consolidated fund of India. If there is any doubt, let me know, dears. If there is any doubt, let me know. Can we finish here? We are going to finish here only. Thank you very much, dears. Thanks a lot. We will meet again tomorrow. Please join my classes at 8:30 again. Thank you very much, dears. Thanks a lot.